Market Technicals morning call video for Monday, July the 8th. I hope everybody enjoyed their long July 4th weekend. Fireworks, great weather we had out here in the East Coast. And it's good to be back in the markets here as far as Monday's concerned, the 8th. Very boring week last week, and usually is when you do have a holiday session. A lot of the big players are away. Market just tends to kind of stay where it is, and grind higher all day with low volatility. So it's exciting to have at least the markets come into play for Monday and pick up where we left off a week back. So where do we go from here? What is the next play? Well, we did have better than expected non-farm payroll numbers, so the job numbers was good. I personally couldn't believe that the market would even rally on that, knowing that if the markets are doing well and the economy is doing well and the economy is actually getting heated up, that just goes to show that Bernanke will rein in on his asset purchase program sooner than later. They were talking December. Rumor has it now that they're thinking maybe September. So I'm very surprised that the market's actually even rallied on something like that. Good news should be a little bit of bad news now, since the markets are heated up and we are chugging along. Recovery is happening, slower than expected, but yet again it is moving along. So, but again, we don't fight it. We're not looking to think what the market. We just want to show. We want to see what the markets are doing and react to it. So, I think the markets from here are at a point now where we either going to break higher, or we are going to roll back over and at least retest the lows, which would be the lows that we just put in 2 weeks back, and again possibly even test those April lows, which we'll show you in a chart. So we're at a spot right now where we're testing the upper end of this downtrend trend line, which I'll show you. Now the indicators really aren't showing us too much, but let's get right into it. I want to show you right in front of you. We have the McClellan oscillator. We did get a break higher here into the Bollinger Band, and then now we just kind of pulled back into a neutral zone area here, which we were kind of been in for the last several months back up until May, where we got some great volatility, and then now we're spiking back up again. So obviously the indicators telling us, look, we can go either way. We're right now neutral, so we can either go higher and or lower. So this is not really telling us much of anything. But a bullish percent, S&P, has given us another buy signal from our sell signal back up in at the end of May. So now it's back on a buy signal again. So we are coming into resistance, though. This is why I'm a little cautious here. I do like the fact that we are down at these lows here at the 50 area, 60. I would like to see us get down a little bit lower before really taking this buy signal. But you need to know that the bullish percent SPX is on a buy signal. Okay, let's take a look at the tick. The tick now is back above zero, which is good to see. If you are below and continue to stay below zero, and this is an end of day tick now, this would tell me a little bit more that the markets may be a little bit in trouble. So that we're above zero is a good sign for the market in itself. Now the NASI weekly, which is a great indicator, I put a slow stochastics on it, hasn't triggered long just yet. So we need one more week. So this is a weekly chart, so we're going to need to know on Friday where this goes. But if we're at these lows here, as you can see, we usually get some sort of a buy signal here. Maybe it gets back up here and then we sell off again. So that's possible. And we are at the upper end of the range, so we didn't really sell off too much. So this here also is telling me you use a little caution. Now the New York Stock Exchange Summation Index is a little different. That actually came down much. We had a deeper sell-off in the New York Stock Exchange Summation Index, and this gave us a buy signal. So this is a little bit more, I like to use this a little bit better on the weekly chart here, that this is actually moving higher. Now we are oversold here in our CCI and our RSI, so this is giving us a buy signal where the NASI isn't quite there just yet. But again, it's literally right there. We could get that at any time. Okay, now let's take a look at copper. We have a weak dollar. We have a strong dollar. It's going to put pressure on commodities and obviously the euro. So with the weak dollar here, we have commodities really not going anywhere, and copper sure isn't going anywhere. And that's also something that we need to really take a step back and think about here, because when you have a stronger dollar, that should put a little bit of pressure on commodities and actually equities at one point in time. Now, we have our WTI trade that we were talking about, and I put this back here back in April, May. We have this long symmetrical triangle with this inverted head and shoulders, and we broke out of that. We did test it. We back tested. We went all the way to that 200-day moving average, was really the buy. And then that would break it out higher. I wouldn't be chasing a trade here. I'd be looking for some sort of a higher low off of this 98 area and then move higher. I do think that crude is going to move much higher in at least the short term in the next few months. You have the driving season here, but you also have conflicts going out in Iran, Syria, Egypt, and that is going to be unsettling. So something to keep an eye on for crude. I wouldn't chase it here, but I definitely look to see where it stops on the next pullback and probably start to nibble in here again. Now, gold is a different story. Gold, we have the weekly chart of gold. I think that your next buy-in is going to be somewhere between 1,000 and 1,150, and that's that low here we had back in early July of 2011. Okay, so this is something that I think that really I wouldn't be buying gold here at all. With a stronger dollar, gold's going to be continue to be pressure. And if you take a look at the monthly chart, gold has entered a bear market here. This is the 8 and 21 cross, and this is a bull market 2002, as you can see, and held that 21-day moving average all the way up back up until May of 2013, and now we just broke down real miserably. So now I think the next target is going to be this cluster area here, up in this area, anywhere from 1,000 to 1,100, 1,150, right in this area. And if we break that, then I think 700 is not going to be out of the cards. I know it sounds really far-fetched, and it is at the moment, but you have to look at the big picture here. So if you're looking to nibble in around 1,000, 1,100, even 1,150, you have to realize where you're going to be putting your stops, and that's something where 900 would first come into play, this little cluster area here, and then of course this big dip lower down at the 700 area, to me, would be a screaming buy if it ever got down there. But I do think that that gold's in trouble. As long as the dollar is strong, that's going to put pressure on all the commodity block currencies, and of course the euro dollar as well. Okay, so let's go right into the charts now. We have our S&P 500, and this is I'm not so crazy about this move. We have this move here, and of course we did break out of this downtrend line, right? This downtrend line here. Now we do have this long-term uptrend line from November lows back testing this area, which is a good sign. We did consolidate for 3 or 4 days, so we'll get a little bit more energy now. We could break out. Now we're up about 3.5 handles in the mini, so we could probably break out of this thing, and my guess is that it fills this little gap area. I mentioned early last week, look for the target of filling the gap, and that's where I want to see where the market goes and see what it does the next day. If the market starts to roll over, and if you look at the momentum here in the CCI, the momentum is waning. You can see this clearly that we're losing some steam here. Now we had a real nice move up. We had a 3-day move up. We had a 4-day consolidation. All of last week we consolidated, and we moved up on Friday. Okay, so this is where the market's going to need to tell us that, hey, we're going to look to roll over, or we're going to continue and at least go for a test of the highs. So that's why I wouldn't want to be short. No, I wouldn't want to be really long here too. I'm looking for next day or so is going to be telling to see if this market momentum has more upside and or if we start to roll over. If you look at the spiders, I put a Fibonacci retracements from the low here, 155.60, to the high of 169.14, and we're right smack dab in the middle of the 50% retracement. Now, we didn't quite fill the gap yet in the spiders. So this morning, if we hold this gain, we'll probably fill the gap, and then we're going to see where it goes from there. Now, don't forget, we also have some resistance here. Ideally, would be the spot right here to look to short any move higher, which would be right up in this area, right here, right between the 61 and the 76% retracement. That's what I would be looking to at least to get short. Now, we don't want to just short, right? We want to make sure that we have a closing candle lower, topping tail, and next day we break the lows, and that's where really we get our trigger to short. We don't want to just short because it got up here, because we could actually retrace all the way back to the 100%. So this is going to be telling in the next couple of days, guys, and then we could actually position ourselves accordingly. Now, just want to show you the spiders 30 minute. As you can see here, here's the gap area in red. We are in the process of filling this gap, as you can see. So 163.40, call it 45, would be the gap fill, and then we would reevaluate it. And as you can see here, we did nothing for 5 days. We just chopped around and really did nothing. And usually holiday weeks, me personally, in my trading plan, I usually like to back off and just kind of wait and see mode, take some time off and reevaluate where the markets are headed, so we don't get chopped around here. Look at this; it's all chop. Especially now, tonight is earnings season, kicks off with Alcoa, so we should have a busy 2.5 weeks of the big cap stocks that are really starting to report. So that's going to be interesting as well. That's going to bring in some more volatility to the markets. Diamonds, same thing. We have the March lows, November lows, back testing this uptrend line. So we need to really get back above here. But again, looking to fill the gap here, which did on Friday. So spiders did not yet, but diamonds did. So we'll see. We'll just take it one step at a time here. But it looks good that we'll probably fill the gap and at least test this area here at 153.18 in the equity markets. Now, we had the head and shoulders pattern in the IYT, the transportation sector. And we just took this right from the neckline, and we took it right from the neckline here. As you can see here, we actually hit our target in our head and shoulders pattern. So now, where does the transports go? Well, transports here, you got to factor in a couple of things. If the dollar continues to rise, and equity markets commodity starts to continue to sell off. Now you have crude oil here, which is really its own animal. Crude oil is now starting to build in some sort of a war premium, possibly in crude, because we have conflict going out in the Middle East. You got to see at one point does transports really start to get affected by that, and the economy. And for that matter, if the transports start to roll over, and they start to react to what crude is doing, then you have to look at you got to take it at a different light and say, well, I think maybe equities may be done, and that could actually push equities lower. Right now, it hasn't done so, but just really keep that in mind looking forward out maybe 4 to 6 weeks. Now, oil had a big run, so I'm expecting some sort of a pullback in oil, and that next pullback really should be bought. So then we really need to see where it goes from there. So it's not a factor now, but it's something that we really need to keep in the back of our minds. IWM Russell, one of our leaders here, really taking out, really moving higher here, doing really well, and it's a good gauge of risk. So the Russell here is at its point now where if we break out higher today, I would be looking for a test of the highs and actually making new highs. Now, Russell Future actually made new highs where the IWM, the ETF, did not. So that's going to probably follow suit this morning, and then we'll look to reevaluate it. Here is Goldman Sachs. We have higher yields. Banks do well, as you know, and now Goldman here seems to be starting to wake up a little bit. Needs to really get above this 50 moving average, and of course the 20, that's actually just above it. So a break above 156 on a closing basis would really send Goldman back up to at least these areas of 165. So that's a trade I'll be looking for the next day or so to see if the movement and yields are continuing to rise. That's going to put a bid in the banks, which is going to be healthy for this rally. As you can see, here's the XLF. Now, just a real quick comment: bonds have really been getting hurt. Now, if the rotation out of bonds is orderly and money rolls into the equity markets, you're going to see further push in equities. However, if bonds really start to crash, really start to take a big hit, that's not what you want to see with equities too. I think that will also affect the equities markets, like any other crash that does happen. So we need to really watch the bond market itself. If it's just an orderly rotation out of bonds and into equities, then that's fine. But if if bonds really start to take it on the chin, really start to get hit day after day, I think you have to use caution as far as equities is concerned as well, for the longer term guy. Now, here's Apple again. I keep talking about it. I like to just show it. We had a nice big move up 3 days. Apple sold off on Friday. Again, to me, this is just a trading stock. I'd be looking to take profits here, see where the next lower high is, and then reevaluate it and see if it can hold that pivotal low of this next lower high, and then maybe we get another move to the upside. If not, look for a retest at least the lows, and if not lower. Okay, and then lastly is the Qs. Qs, guys, we take a look at this, which still, with a little bit of weakness in Apple, obviously Qs are heavily weighted in Apple. You're not going to get as big of a move, but doing quite well. We're above the 50-day moving average now, so look for a test of this downtrend channel here. Okay, guys, that's really about it. Let's see what happens this week. It's going to be interesting. We're going to have a lot of big banks reporting, J.P. Morgan, Wells Fargo, I think Thursday and Friday. So that's going to put really a damper. We'll see if a lot of these earnings are going to be beating earnings estimates, and that's going to be a big factor here and a big role on where the equity markets are going to be headed in this quarter. All right, guys, have a great day, and we will talk to you tomorrow. Take care.